Okay, guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Mr. Douglas Skipworth. How are you?
Hey, man, I'm doing great.
Good. We're bringing you this podcast to give you guys the information that you'll need to be a successful investor, give you the boots on the ground knowledge here. Please like and subscribe our podcast on our YouTube channel, Facebook, Spotify, wherever you listen to your podcast. Please like and subscribe there. Show sponsors are listed on the bottom of your screen there. We cannot do this show without those guys. We really appreciate what they bring to the table for us and for our clients. Zoom calls, guys, if we're interested in those Zoom calls, again, I put a pause on those. We were having a few people attend, but shoot me an email, dean@CrestCore.com, if you're interested in that. And I help buyers and sellers every day. I buy investment property here in Memphis. We have about 100 listings right now, and I got buyers coming out of the woodwork. So anything you need here in Memphis, just let me know. Send me an email, dean@CrestCore.com. All right, deal of the week. I brought a deal of the weekend today, cool. So awesome. let's check that out. 1906 Baldwin Drive. It's in 38127. 3 bedrooms, 1.5 baths. It's got 1,100 square feet. This one needs about 28 grand in rehab, we believe. The market rent is $900 for this one, and your ARV is 140 to 150,000. List price is 74,000. So it looks like we've got about a 100, even if the rehab was 30, 32, 34, 35, I mean, like we've still got a 100% burr here on this one. So let me breeze through it one more time. 1906 Baldwin, 38127, 3 bed, 1.5 bath, 1,100 square feet. List price is 74,000. Market rent's 900, and your ARV it's about 140 to 150,000. And let's just count it 30 grand in rehab. So let me know if you have any questions, dean@CrestCore.com, and I'll be happy to send you some more information on that one. Okay, great. Wow, let's jump right into it. Yeah, we're going to do a market update today. Man, okay. I just hit money. We're going to do a market update today. I feel like with everything that is going on in our market and in our economy and everything like that, I feel like it's not a bad idea just to talk about what we're seeing, what we're kind of envisioning and so forth. The one thing I'm going to lead off with is houses are still selling.
Yes.
We're closing I'll be fair here. We're closing an unusually large amount of homes right now because go ahead.
Yeah. No, that's what you're on it. I was like, how many did you close in September?
What was the number? 80? Was it 80?
Over 90.
Over 90. Okay. Yeah.
So just almost 100.
Yeah. Over 90 houses closed in September. So
in October,
we're well over 100.
Yeah. So houses are selling is what you're saying.
Oh, houses are moving and selling. And I'll be fair here. I'm selling off some hedge fund listings. So if I'm being honest, we don't typically close 100 houses a month. So, but we are in that 25 to 30 house range every month. So we are seeing activity. There's, with those 90 closings, there was another 12 to I think 15 that weren't Vinebrook closings. So there's, our hedge fund closing. Yeah. So there's plenty of other activity outside of just that, right?
Deals are happening. People are buying and people are selling.
Yes. And it's now this is what I told a guy yesterday. I said, people wondered about the crash. Well, we have had it and it's happening. And I'll say this again. I said it on last week's podcast, but from July 2022 to July of 2023, we are down 54% in transactions.
Yes.
Okay. Not in pricing, not in anything like that. We're over half less transactions than we were a year ago. Yeah. So if you're wondering, hey, where's the crash? Where it's at? Well, it's pretty much happening. So our price points stay the same.
Yes.
We 1 or 2 percentage points up or down in all these areas. So houses are still selling, lines of credit, hard money, cash. Those are the deals that are the majority of what we're seeing right now.
Yeah.
So I don't,
more. So it's a little bit like it has been this way. I think it's more of the same since rates. They've plateaued, but they definitely were plateauing 3 to 6 months ago when it was kind of like, okay, the end is in sight. You can see the light at the end of the tunnel. So it seemed like that was when maybe people kind of had a sigh of relief. And since then, it's been pretty much the same.
Yeah.
Because you had that dramatic crash
Yeah.
in volume.
Yeah. And I read something yesterday
Earlier.
from the feds that I believe our interest rates are flat.
Yeah, that's what. Yes, exactly.
I don't believe they're going.
Plateaued.
Yeah, I don't believe we're going to tick up much. I don't believe we're going to tick down.
No.
Anytime real soon. I think we're going to be. This is what it's going to
More
look
of the
like.
same.
Yeah,
which is as we're saying, is like there is an opportunity to sell houses right now.
Yeah.
And you've sold dozens and dozens and dozens.
Yes, and people
this
are
year
using
hundreds and hundreds,
and people are also using a loan, Douglas. I mean, like
Yes.
every one of these are not cash and line of credit and hard money deals. I am getting some loans. I mean, you can make sense of some of these properties that are maybe in great shape and are occupied and cash flowing, right? So there are some circumstances where a loan will work. So if that's your only option, I don't want you to feel like, hey, I'm out of the ball game. You just might have to be a little bit more specific on what we're buying and where and for how much. And I'll give you an example. This deal of the day here on Baldwin, I mean, $74,000 plus a $30,000 rehab. I mean, you're looking at $105,000. The payment on that, even at an 8% interest rate, it's not sky high. I bet you can make it work with this.
Yeah.
So I don't know for sure. You'd have to just look at all the details. But loans are still working.
Good.
Not as much as they have been, but loans are still working. You've got to work your numbers. You got to search harder. You just got to get a little bit more aggressive as onto what you're looking for, I should say.
And not to mention just you date the rate, marry the property. So you get in it, you buy this property, you get this rate for a little higher than you want to pay. You wait it out a number of months, maybe a year or two, or however long. Then you refinance, and you're in at a lower rate with a lower payment.
I like the date the rate, marry the house comment. Here's the only thing I'll caution on that, and I haven't really cautioned anything on it yet. But here's the one thing: when we say date the rate and marry the house, the one thing we're banking on in that situation is that the interest rate is gonna drop, right? So here's what I'm cautioning everybody on. I wouldn't buy a house that you can't afford. Meaning, if you're buying a home,
that's fair.
Yeah, if you're losing $150 a month in it because the interest rate is $800 or $200 a month, and you say, "Hey, I can swing that for a while," I'm not going to advise doing that because there's no guarantee that the rate's going to drop. There's just no guarantee. I can't sit here and tell you that in a year after an election or after 2 years or whatever it may be that we're going to see a 5% interest rate again, because I don't, you just don't ever know. So what I'm telling you is date that rate, but be able to afford it, right?
That's fair.
Squeeze it in, even if it pushes, that's fine, right? I'm okay with that because I do believe the rate is going to drop. But it's not something I can sit here like anyone else and guarantee it.
Right.
So still date the rate and marry the property. Just be careful that you can afford it.
A good word of caution. And I've never tried to time it.
Yeah.
Other than to say, man, I know that rates will go down at some point, and they will go up at some point.
Yep.
So we'll see when that is.
That's exactly right. Cash is working on these BRRRR deals. I've got about, a lot of people are saying what is selling. The majority of it are BRRRR properties. That's a majority of what's selling right now. Homes that need rehab, that are not in good shape or have been mismanaged. Great topic. We're going to hit that next week. On next week's podcast is mismanagement. So,
good. Okay, good.
So that's kind of what's surfacing now is BRRRRs.
It seems like the last few months you've had BRRRR deals as deals of the week.
Last 6 or 7 months, that's mainly what's been selling. So yes, last few deals of the week have all been BRRRRs. And look, if you say to yourself, hey, I don't have $105K cash, Dean, to buy Baldwin 1906 Ball, that's okay. We have other ways to do this.
Yes.
The lines of credit, you can use hard money. Corland Financial is a show sponsor.
Yeah.
They're a sister company of ours, and they're a hard money lender. So that's what a lot of people are even doing right now. Hey, let's go get into this house. Let's get it done. Let's get it done, meaning let's rehab it, get it occupied,
right?
Get it off that hard money, and let's go to a bank and go permanent. So, there's several ways that you can make it work. You need to buy right. That's always been the situation with me, right? I've always told you to buy right, no matter what the market conditions are. Every deal is an investment deal, is a good one if you buy it right.
Yeah,
every single one. So. I would encourage that for Airbnbs. Interest rate isn't going anywhere. We're just kind of breezing through our notes here, but interest rate's not going anywhere. I don't believe. You're a little bit, I think, more versed on this than you can speak on this, but I don't believe the feds are going to lower this interest rate until we have an election. And even then, I don't know that day after election in 24, we're just going to see some downhill spiral of our interest rate. I don't.
It doesn't seem like it. It seems like with all the geopolitical stuff that that was a reason for them to pause their last interest rate hike. So they've paused it the past 2 times. So, and it was near the top, if not at the top. So the question is, how long is it going to stay at the rate that it is before they start to lower it down? 6 months, 12 months. People vary. It's not going to be tomorrow, but but people predict that it's coming. But it might, to your point, it might be after an election. You don't know, but it doesn't look like it's going to go. My point is it's not going to drastically go either way.
No.
So there's a lot of, even though it seems like there's some uncertainty, we're living in uncertain times, it seems like there is some certainty that the rates aren't going away. So you can, to your point, look for deals, know what works, try and make your numbers work, try and find the deals, pull the trigger, make offers.
Yeah.
Goodness,
and
make
historically,
offers.
this is not a bad interest rate. I mean, I know it's bad to us because humans naturally, we all think in the now. We can't think past 2 years ago where the interest rate, and even in 2016 was, I think, 6.
I went and looked at my, not unintentionally, I went and looked at the first 2 loans I got on rental properties, 8.5% and 8.8%.
Yeah. And you made them work.
Oh, they were great.
Yeah.
Yeah, they were
Price
great. I
points
was
are probably different,
thrilled. I was thrilled to have rental properties. I was thrilled to have a loan on those rental properties. My tenant was paying the rent, which was paying the mortgage. So in 8.5, 8 and 8, that was okay.
See what I mean?
Yeah.
And you can go to historical breakdown and look at, every 10 years, the 50, 60, and they'll give you kind of what it was. And you can just see it sky high. And it just ticks down a couple of points each year all the way down to 3. And then we jump back to 9. So I get, or 8 or whatever. So I understand kind of where the mentality is, but I think you also need to understand where the mentality is.
Yeah.
It needs to be that I'm going to make this work at 8. I mean, you can't just quit real estate investing because the interest rate went up. I mean, I hope you don't. You don't need to be in this if you're quit right now. And because this, I think, is what it's going to look like. I do. I don't think it's going to move anytime soon. And what are we going to do?
Neither up nor down. So there's some certainty. So that's what I'm saying. It's hey, go figure out how to make these numbers work and do it. I mean, I've been bidding on properties.
Yep.
Got a couple under contract now, closed one last month. So, but because it's kind of you can kind of see what's happening.
I'm burring right now several, and
that's right. Good.
And I've made the decision, and this is kind of what I've advised others. And if you've got a rental portfolio and you've got some properties coming in, low interest rates, and you're cash flowing, this may seem a little risky to some, but I'm buying property right now with the assumption that the rates will fall, right? I'm not really creating much cash flow with these that I'm buying right now. They're basically pushing. I'm not taking a $300 bath every month in anything. I'm not. That's what I told you earlier. I'm not doing that. But a lot of them are pushing. I think I have one I'm losing $50 on, and there's just a few scenarios where it's just the same. And the reason why people might say, why you've been smart this entire time. Why take a chance now? And it's fairly simple. I mean, I have a large portfolio that is cash flowing. They were good prices at good rates. We've got a really good cash flow on these. Mm-hmm. The first 6 months of this year, I didn't buy very much because I was pretty timid on the interest rate, right?
Right. I
bought 2, I believe, the first 6 months. So, but then I started doing some more research and talking with you and other economists and bankers and whatever, and every single one of them, everything I read, whoever I talked to, the interest rate's staying the same.
Yeah.
So, and what I wasn't going to do is just sit on the sidelines and just let my others sit here and work. And that would be great. But I'm not just going to sit here on the sidelines and wait 2 or 3 years or forever to buy any more real estate, right? Like, what a wasted opportunity. So I am being pretty specific on what I'm buying. And I'm going pretty low on my offers. Every 5 offers I'm making, I might get one of them. Right. So keep that in mind, even I'm having the same issues. So what I decided to do was let's go low. Let's get some burrs in here. Let's take them at the 8% interest rate that I'm getting right now. I don't want to get 100 of them, but let's get several, and let's find out what this rate does over the next year, year and a half. And you might say, what's the big advantage? Like, here it is.
Right. Yeah. That's where you're going.
And this is super important to me, to you, to the guys that are listening, that I think you need to hear. I'm taking a little bit of that chance because these houses will never be this price again. I do not believe that once we kind of cycle through this interest rate portion, that you're going to be able to find a home like 1906 Baldwin in 38127 that only needs $30,000 in rehab for $74,000. And that's the list price. Could you get this for 68 or 69? Probably so. So never am I ever going to be able to buy a house in this area for $70,000 and get all in under 100 on something that's going to rent for 900 or 950. You're just not. So I am not going to get caught because I've done this once.
That's right.
I've done this once already when I've told the story about the homes in Horn Lake, Mississippi when I first started. They were $30,000. Now they're $130,000. So I am not going to miss an opportunity to get some properties for a cheaper price that I can't get later. Right. Because you're going to struggle to make them work later at the higher price with the lower rate. You're still going to struggle. Yeah. Right?
Right. You're still going to struggle. And like you said, the rate's going to go down. The price is going to go up. The rent's going to go up.
Yeah.
So it's still going to work, but you're going to be, or potentially work if you can find and wait and be patient for the right deals. But what you're doing is you're building in that price going up and that rent going up and your rate going down. So
I would much rather have those.
I completely agree.
Yeah, I would much rather have those, however many I'm going to buy at that rate. I'm hoping it's 40, to be honest with you. I'm hoping I can get 30 or 40 of these at that rate. I'm about halfway there now. So I don't know that it's a big risk. I mean, I'm buying properties low. The prices are going to go up. If I need to sell them later, we can. Yeah. Go ahead.
Well, I was going to say, when we've talked about this, if you're just now tuning into the podcast, where have you been? But B,
shame on you.
But B, what we've talked about in the past is what you're saying, and what we're just kind of referencing is that right now, the supply is so low and the demand is so low, which has kept prices up because people have locked in these rates at these lower rates and they're not selling. Well, once rates tick down and people start moving and get interested again, the supply will increase. The demand's going to increase and supply's increase, but the demand is going to outstrip that supply because we're limited on our supply. In Memphis, we're not building tons of houses. Every now and then houses get taken out of the housing stock or properties get taken out of the housing stock. So we believe that there's going to be 10, 15, 20% appreciation just like that when kind of the floodgates of demand open back up.
And think about it for 1 second, and we'll kind of wrap it up with this, but think about this for 1 second. Like, inventory is super low, like you just said.
Yes.
The interest rate is at 8%. I read the other day that every quarter of a point percentage rate drop, 4 million buyers enter the market. Every quarter. So if it drops from 8 to 7.75, we got another 4 million buyers that are coming in, and so forth. So if you don't believe that the prices of the houses are going to continue to go up when the interest rate drops, then I don't believe you're reading the right stuff. It is 110% going to go up. I mean, think about you as a seller. You can't get your $400,000 for your house right now because it's at 8%. If the rate drops over a year to 6%, your house is now going to be $450,000, $460,000. Is anybody going to sell it for $400,000? No, you're going to sell it for $450,000 and $460,000. Every seller is. So that's my point. Yeah. I believe you just have to prepare yourself. Then at that point, when that rate does drop, that's when you go and refi, right? That's when you go and refinance because you've already bought them. The difference between me and another investor that says, hey, I'm not buying right now, I'll buy then, is that I'm going to have 40 more houses than you will between this time and there.
Yes.
There's the difference. And, I'm not a big risk taker. I don't go into areas that you shouldn't buy in because it's cheap. I don't try to set records with my rent. I don't try to do things like that. So this is maybe the most risky I've been and I can be, but I'm fully confident. And that's kind of why I'm sharing this, to be honest with you. It's like, I'm 110% confident personally that we're going to hit that stretch. I don't know when, but we're going to hit that stretch where the rate is going to tick down some. People are going to get so excited that they're going to stick their house on the market, and we're going to see a tick up in the inventory, and it's going to be sky high because they know
a bigger tick in demand.
But a bigger tick in demand. So the sellers are obviously going to go up. So I just want to be prepared. I wanted to beat that rush. I wanted to get involved because you know what happened then? Well, then I can buy them again at the higher prices because the rate's lower.
Yeah.
It just keeps me in the game, and it keeps my business and my rental portfolio moving.
Yeah. Hey, one thing I had on a note with that we totally bypassed, but coming back to about this time and why it's a good time to buy is that tenants are paying rent.
Yep.
And the vacant occupancy, I mean, September 2023, just to date this, September 2023, I don't know about you, but across my portfolios, highest occupancy ever and highest collection rates ever, lowest outstanding or delinquent debt ever.
I have one vacant that's being rehabbed. One.
Yeah. So the market for rentals is awesome right now.
I want you to discuss, and then we'll wrap this up. You know what I'm about to ask. Talk about real quick what tenants do when time gets rough.
Right. So let's call this the third big one that we've seen since we've been kind of doing this, and that was the Great Recession, COVID, and now this kind of economic funk that we're in. In my experience, is everybody gets scared and thinks, oh, well, man, delinquencies are going to go up and evictions, and it's such a terrible time to be a landlord.
Yep.
And we found it to be the exact opposite. Polar opposite. And like finally, like it's sinking in, like, okay, maybe this is what happens. And we found that renters, probably people in general, but renters specifically, prioritize four things during economic hard times. They prioritize their housing. So they're going to pay for housing. They're going to pay for their utilities. They're going to pay for their transportation, and they're going to pay for their food. So like those become the highest priority. Obviously, they're always priority, but like in good times, it's like you just get loose with everything. But there's nothing like a good economic storm to kind of get everybody sitting up, man. When you're out on a boat and the waves start rocking and the thunders are like, man, everybody, all hands on deck.
Yeah.
Isn't that a term?
Yes.
You know, what does that mean? It means the storm's here, all hands on deck. Here we go. And that's what people do during economic times. They prioritize those four things, which is good for them, but it's also good for being a landlord because what we just described is your occupancy tends to stay higher than normal and your collections tends to be the peak times of collections during the economic calamities, which is counterintuitive. But when you sit back and think about it, that's been our experience. And okay, I can understand how that works.
Makes sense for them in that situation. So that's good information. It's just today I thought updating on everybody of how we're feeling, how we're approaching
personally,
the market.
What we're doing.
I'm personally fine with what's going on. Right. I understand that, and I'm using loans. So don't think I'm sitting like, I get a lot I'm not sitting on a big pile of cash and I'm buying cash and I'm wondering why y'all can't make it work. I'm using loans on all of it. I'm using my line of credit at the bank. We've talked about it. So I just wanted to kind of give you guys an update on what I'm doing, what Douglas was doing, what we're seeing in the market. And to sum it all up, it's going to be a lot more of the same. So let's get used to it. Let's learn how to adapt to this. Let's learn and figure out what deals and what properties and what areas are working right now. And let's work together and get after it.
Man,
that's great.
Amen.
Anything else?
Amen.
Okay, guys. Thanks a lot. We'll see you next week.